195,000 people. That's how many people are asking Google if the stock market is going to crash this month. If you're looking at the headlines, the experts are screaming out about AI bubbles, the rate plateau, and the 2026 election cycle. But here's the thing, most people are asking the wrong question. They're asking when will it happen so they can run away. On this channel, we're going to ask a different question. How do I make sure a crash actually makes me richer? Today, I'm showing you why a market crash is just a flash sale for dividend investors. The 3 red flags I'm watching in 2026 and the dividend shield strategy I'm using to protect my journey to $100,000. Let's look at the facts for 2026. We've had a massive run up in tech and AI over the last 2 years. Historically, the market has a correction of around 10% every 1.6 years. So we're technically overdue. There's the AI hype. We're seeing companies with no profits trading at 50 times their earnings, and that's a red flag. There's the rate plateau. Interest rates aren't falling as fast as people hoped, and that puts pressure on companies with high debt. And then there's the concentration risk. 30% of the S&P 500 is just 7 companies. If one of those trips, the whole index falls. But here's the thing, the stock price is not the business. If the price of your house drops by 10% tomorrow, but the rent coming in stays the same, did you actually lose any money? No. And that is exactly how we're looking at the dividends. So I contribute around $526 every month to my portfolio, and if the market crashes 20% tomorrow, most people are going to stop contributing because they got scared. And that's the biggest mistake you can make. When the market crashes, your $526 buys 20% more shares. And because we focus on dividend kings, Attica Strats, companies that have paid out for 20 or 50 years, those dividends usually keep coming. When you reinvest those dividends while the prices are low, you're supercharging your crossover point. A crash in 2026 might actually shave 2 years off my goal to $100,000 because I'm accumulating shares at a discount price. In dad's terms, it's like finding your favourite lawnmower on a 50% discount at the end of the season. You don't cry, you buy. So how do we crash proof your portfolio? You need a dividend shield. Check out the FCF payout. If a company pays dividends out of free cash flow, it's not just an accounting earnings, they can survive a recession. The AI safety filter. We talked about this before. Buy companies that do physical things AI can't replace. Think utilities or healthcare. The needs versus the wants. In a crash, people stop buying new iPhones, but they don't stop buying toothpaste or electricity. So look at your consumer staples and energy. Is the market going to crash? Eventually, yes. Whether it's next Tuesday or in 2027, it doesn't really matter. If you're a long-term investor, time in the market beats trying to time the market every single time. My goal is $100,000 and then it's $200,000 for that self-sustaining status. A crash doesn't change the destination, it just changes the price of the ticket. I'd rather buy a cheap ticket than an expensive one. Don't let the 195,000 scared searchers dictate your future. Be the person who stays calm when everyone else is panicking. I'm documenting every step of this journey, the green days, the red ones. If you want to see how I build my wealth to $100,000 from zero, hit that subscribe button and let's grow together. Don't forget you can watch my monthly portfolio updates from the very beginning of my journey. I'm Steve Williams and I've been the Dividend Dad.